Hello and welcome to the Friday market update. Well, election over. What happens to mortgage rates now? So rates dropped just below 7% this week, but will the trend continue? So in the run up to the uncertainty of the election, interest rates climbed about 1% in the last 6 weeks before the election, going from 6.1 to 7.1%. So uncertainty is a killer. Uncertainty leads to pull it back, playing it safe, which is exactly what happened on Wall Street. So whether you like the outcome or not, we now know who the new president will be, and we had a history of this president. So many economists think inflation will go up because of the planned tariffs Trump has said he will impose on imports from the likes of China, Germany, Japan, Mexico, South Korea, and others. But what is a tariff? So a tariff is essentially a tax charged to the importing country. For example, if a widget comes in from Japan for $100, the US currently has a pretty low tariff on average of about 2%. So to import that widget, it's going to cost Japan $2 to import a $100 widget. Now, the numbers thrown out there on new potential tariffs are 10 to 20%. So instead of Japan being charged $2, they're now for the import. Now the importing countries could be looking at $20. Boom, boom, as their tariff tax. So in order to maintain profits, the importing countries may need to now charge more for the widget to make up for the additional tariff. So instead of charging $100 for the widget, they now need to charge maybe upwards of $125 for the widget to maintain the same return. So this translates to a higher price at the store for the widget because everyone has to make a buck, and a portion of all the increase will be passed on down to the consumer, as it always is. So this is inflation. So why in the world would Trump do this? So inflation during the previous Trump years was 1.9%, which is right in line with a Fed target of 2% and way lower than many of the other presidential history. So most economists say inflation will go up with tariffs. Now, we all know Trump is a negotiator given his business background. He will use the potential tariffs as leverage to create a stronger job market with more high-paying manufacturing and tech jobs done in the United States. Will it work? Only time will tell. I wouldn't bet against it, though. In the meantime, all of the above will take time to fall into place. First, we have the 2-month transition period for the new administration to get all set and ready for the getting into the presidential house, the White House. The first 100 days in office, which is always a sprint, multiple economic reports, including inflation and job reports to come out, and policies that they want to have implemented actually take effect. So in other words, I don't think we're going to see much change in mortgage rates for a while. It is still a report by report analysis until there is a clear trend that the markets can confidently trade against. So unless there is a significant drop in jobs and the economy, rates will bounce around from economic report to economic report pretty much as the wind blows. So we all know there's a big pause by home buyers prior to the election. The stock market jumped significantly right after the election to their highest levels ever. Now, those individuals with 401ks, stock portfolios, are feeling a little bit richer and probably a little bit more comfortable to spend money and now proceed with the purchase of a new home. So it's projected that the number of home sales will rise by over 13% nationally in 2025. Continuing to wait for lower interest rates and lower home values is highly unlikely. It's still a supply and demand issue. Plenty of pent-up buyer demand who want to get out there and buy homes, but have been waiting on the sideline, and a relatively low home supply. Real estate is for the long term, and those who wait will almost assuredly pay more for the house. Now, there is strong inventory at the moment for buyers to choose from and still potentially get seller concessions. So don't wait, because at some point it could change quickly. Momentum is a funny thing and hard to explain. There is new energy right now, and with many feeling very optimistic, some not so much, that could turn into a very strong and healthy real estate market in 2025. So buckle up for the ride. Hopefully it's a good one. So as always, feel free to reach out to me directly to get your buyer's pre-approved and educated so they can make the right decision for them and understand exactly where they stand. You can also send them to my calendar link where I will go through a free CIA credit income asset analysis so they know exactly where they stand now and what they need to do to get into a home. So let's run their numbers. Hope you have a fantastic weekend, and we'll see you next week. This is Gaylord out. Bye-bye.